So, what does it mean to save age on a life insurance policy? I'm Byron Udell, founder and CEO of AccuQuote. Since 1986, we've helped millions of people save money on their life insurance. Saving age is a perfectly legal way to save money on your life insurance. Sometimes it makes sense, and sometimes it doesn't. We're going to talk about both so that you'll have the information you need to make an intelligent, informed decision as to whether or not it makes sense for you to save age on your life insurance policy. Life insurance companies price their products based upon the age you are on the policy date or the start date of the policy. The price for a 20-year level term on a 45-year-old, for example, is higher than the same product on a 44-year-old. The same would be true for most other types of life insurance like universal life or whole life. Now that makes perfect sense because the risk of death is greater at the older ages. Each year, there's a date after which your price will be higher because your age has changed. Some companies use your actual birth date as the date the price changes, but most life insurance companies use a concept called age nearest, meaning that they treat you and the price of any coverage you buy based on the age that you are closest or nearest to. So, for example, if you turn 50 on January 15th, they'll treat you as 50 as of July 16th, 6 months before you actually turn 50. Either way, saving age is the practice of dating a policy to start on a date one day before your age changes based on that insurance company's rules, so that you can lock in a price for the age of a person 1 year younger than if you hadn't saved age. You can do this legally for up to 6 months after your age would have changed. You can even backdate a policy to start up to 6 months ago in order to save money in the long run by paying a lower premium for the entire time you own the policy. Of course, by doing that, you're going to have to pay for some coverage you didn't have. Now, sometimes that makes sense and sometimes it doesn't. It just depends on the numbers. For example, take a male age 60 in perfect health looking for a 20-year level term policy for $500,000. Annual premium would be about $2,500 a year. If he were 61, the price would be $2,800 a year. Now that's a $300 difference per year times 20 years, or a total difference of $6,000 more at age 61 than at age 60. Now let's say he was born on January 15th, and let's say the insurance company uses age nearest as their method of determining his insurance age. So on July 16th, he turns 61. And let's say today is August 15th, a month after his half birthday. If we don't save age, his policy will be issued at age 61, and he'll pay the higher rate every year for the next 20 years. But we can specifically ask for the policy to start on July 14th, which is called backdating to save age. If we do that, we can save his age at 60 and save him $300 a year for the next 20 years. Again, in our example, it's August 15th right now. And let's further assume that the policy isn't actually issued until, let's say, October 15th. By starting the policy back to July 14th, he'll end up having to pay for 3 months of coverage he didn't have, which will cost about 1/4 of the $2,500 premium, or about $625. Is it worth paying $625 to save $300 a year for the next 20 years? Well, I think so. Understand that saving age, though, is never mandatory. It's always optional, so you can do it if you want to, but you certainly don't have to. Generally, the older you are when you buy the coverage, the more likely it is that saving age will make sense for you. At AccuQuote, we'll be happy to give you the benefit of seeing the numbers both ways so that you can make the choice as to whether or not you want to save age. It's nice to have choices. Give us a call anytime at the number on your screen. Thanks for listening, and I hope this was useful.